You don't know if they're going to do the financing. You don't know at what price they're going to do the financing. And no matter what price they do the financing, you're not sure if the market's going to like it or hate it. So there's three big questions there. Okay, most of these companies are going to go bankrupt. Most of these companies have very little cash on hand. So I just expect the worst and I'm never disappointed, you know? So like very rarely will you see me hold one of these plays overnight that does not have a lot of cash on their books, that has, you know, kind of screwed people in the past, especially a lot of these biotechs. Anytime a biotech has positive data news or positive news and the stock spikes big, they're so thankful, not because the data is going to be meaningful in the long run, just because it gets people interested in their stock, and then they can do an offering, then they can raise enough money, hopefully, to last another few years. But then again, you just don't know if they're going to do the offering or not. So it's all a guessing game.
So yeah, so like if we're looking through their, okay, so right now I got TTCM up right on the screen.
Well, TTCM has no product. They have no revenues. They have nothing.
Okay, so let's pick a different ticker then.
Yeah.
Maybe.
Pick FCell. They did an offering.
So where in the financials? So if I go to should I go to financials?
Yeah, click financials.
All right. I mean, where would we look in here to look at their cash and
balance sheet, middle, right above the income statement. There's a little link.
Yep.
Balance sheet. So you can see their current assets. So, you know, they still had quite a few millions of dollars in the bank, and yet they did a financing anyways. So this is why, like...
So they got 130 million, right?
Well, I just look at the cash and cash equivalents.
Okay.
I don't care about inventory or other stuff. But how much cash do they have? So they're burning a little cash, because you see here they go from like 64 down to 49, down to 39. So they're burning cash, but they didn't need to do a financing, they just did it. So this one wasn't even really predictable, and that's why I think a lot of people got screwed down. So they're basically being, dropping, but then for a few days they had a nice little run-up. So they used that run-up as an opportunity to do a financing. So they didn't necessarily need it, but at the same time, their stock went from 20 cents to 90 cents. They took advantage of it.
when did they do the offering? Does that say here in Yahoo Finance or not?
No, that was that was the big gap down on the 15th.
I was short too and I missed it. I like covered it was going sideways.
Yeah.
And I was like, all right, this thing's not dropping. I'm not gonna sit here and get squeezed the next day, so I covered, and then the next day my buddy called, dude, FCell, are you still in FCell short? And I'm like, no, why? And he's like, bro, it's down to 50 cents.
Yeah.
I'm like, fuck you.
It's always the way it goes.
They did a $30 million offering.
So where are you finding that out? Where did you see that at?
They did, oh, well, these are actually old tweets. Huh, that's funny.
Oh, it's Twitter?
Hold on. Yeah, I just typed in Twitter and I just typed in FCell offering. Let's see, those were old. 27 million. No, that's August. Shit. These are all, they've done a lot of, this is the one thing that they've done. They've done a lot of offerings because they're part of the reason why their stock is dropping so much is because they're just not profitable. They don't have a good, business model. So whenever the stock is up, you don't really even have to look at the SEC filings to tell you the truth. Like if a stock is up that's priced under $1 and that has like this long-term downtrend, they're just going to do it. They're just going to raise money.
They have to. They gotta take the opportunity.
They have to. That's it. If you look at, you kind of think like, okay, most of these penny stocks are going to go bankrupt. This is a kind of classic bankruptcy type chart. How do you stave off bankruptcy? You have to raise cash. How do you raise cash? No one's going to invest in a bankrupt chart. Oh, the stock just tripled on whatever hype or news. Let's take advantage of that opportunity. Expect the worst out of all of them, and you won't be disappointed. I know it's a sad way of looking at things, but it's true. So you can guess. So, you can go into the SEC filings like, okay, what is the cash here? What is that? But it's so difficult to say, okay, this company has 10 million. They will do an offering. This company has, they had 30 million. They still did an offering. They didn't have to. But you just have to kind of think about this logically. And then there's, people where they say they look through the SEC filings and they look at the warrants, so then they can convert the warrants to raise some money. And then all the short sellers say, this stock has warrants, and that's their basis for the short. And yet, if there's enough volume, the warrants are meaningless, and it just, runs through it. But then also, just to add another thing, in case you're not confused enough, you don't know if they're going to do the financing. You don't know at what price they're going to do the financing. And no matter what price they do the financing, you're not sure if the market's going to like it or hate it.
Huh.
So there's three big who the fuck knows questions there. Most of the time, they'll do an offering. It'll be bad. Because most of the time, they won't be able to raise the money at current prices, especially when it's pumped up from 30 to 90 cents. So you can, if you know that there's going to be an offering, there's probably like a 60 or 70% chance that it'll be a toxic financing where they're just willing to sell it at a 30, 40, 50% discount because they're just happy to get money.
Maybe it's a silly question. So the
There's no silly questions.
offering and the finance, are they similar?
Yes.
Mean?
Yeah, so there's many different ways to raise money, either through warrants or offerings or insider sales. Like there's a whole bunch of different just questions. This is what came out too on FSL. They say they may not be able to refinance their credit facility. So they're not even sure they can raise more money.
Well, they gotta, look at this, their last 8K filing, they got a notice of delisting for failure to satisfy and continue listing rule standard.
But that's just because their price has dropped so much. So,
That was July 18th. That was a couple days ago.
yeah, I mean, there's good and bad of everything. The biggest thing is that they dropped. They dropped big off their highs, and this is pretty standard.
Yeah, I totally screwed up that short.
But it's okay. Now you see, hopefully you'll have more conviction shorting crappy charts like this.
Tim, you mentioned that if for the stock has a warrant, but if has most people say, oh, this stock has a warrant, it's a good opportunity for me to short.
Yes.
But you mentioned that if this stock has a big volume, what do you mean? You mean 1 million, 2 million,
So
or 10
warrants.
million?
So warrants is basically just a way to dilute the stock. So the warrants get executed. There's more shares. So theoretically, each share is worth less. But let's say when a stock hits a certain level where the warrants execute. So let's say there's 3 million shares that are now activated because they hit this price. So there's going to be 3 million shares that theoretically could be sold. But if the stock is trading 20, 30 million shares, it'll take those 3 million and just run right over it because there's so much more volume. The warrants come into play when there's not a lot of volume, and then it creates this massive thing of selling. No different than insider selling. When some insider says, "Hey, I'm going to sell, half my position," that's going to be a drag on the price because that's a lot of shares. But if the volume is big enough, it just doesn't matter. And a lot of short sellers are using warrants or insider sales or any kind of negative news as reason to short. But what they fail to understand and what they fail to talk about is that all these companies are shit. Like, we know that. That's why the stock is fucking trading at 30 cents in the first place. So the negative news, the bad valuation, it might already be priced in. But shorts are very negative, trollish, Schmiegel-like figures. And they just look, very trollish. Trolls would be a compliment to many of these short sellers. They're basically like lepers, social lepers, physical lepers, mental lepers. They just have diseases galore. So they look for the negatives because their whole life is fucking miserable. And so they want everyone else to be miserable too. And we must resist them and put them into a house of their own doing and burn it to the ground so then lepers never can be heard from again. Hey, Tim Sykes, Millionaire Mentor and Trader. Thank you for watching my videos. I hope that they help you. I want to share everything that I've learned over the years. You can check out more videos right over there. And also click subscribe so that you can watch all of these videos, get that knowledge, and become my next millionaire student.